Now guys, let us go ahead and take on this example on Ind AS 23 borrowing cost. It is from May 23, 2023 RTP, right?
Yes, sir.
And this sum also appeared in September 2025 examination. Here we go with the question.
LT Limited is in the process of constructing a building. The construction process is expected to take about 18 months from 1st January 20X1 to 30th June 20X2.
So they are suggesting that this asset is a qualifying asset, and that is going to take a substantial time to complete. Next.
The building meets the definition of a qualifying asset. LT Limited incurs the following expenditure for the construction. 1st January 20X1, 5 crore rupees.
On the first day, they're going to spend rupees 5 crore on construction. Next.
30th June 20X1, 20 crore rupees.
6 months later, on June 30th, they spend another how much?
20 crore.
20 crore. Next.
Then 31st March 20X2 to another 20 crore.
Another 20 crore.
And 30th June 20X2, 5 crore.
5 crore.
On 1st July 20X1, LT Limited issued 10% redeemable debentures of rupees 50 crore.
That means what? Initially, they must have the 5 crore expenditure. And also, they spent another 20 crore on June 30th, right? They spent almost 25 crore before they borrowed the money. So that means that definitely they didn't borrow any money for this. How did they fund the asset? Think about it. They must have used some other loan, okay, the cash available with them for construction of this building, right? Because that cash would have been initially, kept for working capital purpose. So what they've done, they've used the money for this construction, and later they're going to issue some debentures to raise more money for the company, right? What percent debenture?
It is 10% redeemable.
They're going to issue 10% debentures. Worth how much?
50 crore.
50 crore rupees. Next.
The proceeds from the debentures form part of the company's general borrowings.
That means these are not, it's not a specific loan taken for this project. Is that fine? It's a general loan.
Which it uses to finance the construction of the qualifying asset, that is the building.
They're going to use this money, a part of this money for construction activity also, right?
Yes. LT Limited had no borrowings, general or specific, before 1st July 20X1.
Maybe they use the money available in the bank for that, spending that 5 crore and 20 crore, right? And on 1st July, they're going to borrow money, and it's a general borrowing. Next.
And did not incur any borrowing cost before that date.
That means you cannot capitalize any interest expense for the first 6 months, right? Only from July 1st onwards, you can calculate interest on the amount spent on the building. Fine. Next.
LT Limited incurred 25 crore rupees on construction cost before obtaining general borrowings on 1st July 20X1, pre-borrowing expenditure.
Nothing but the 5 crore and 20 crore, right? What they spent on Jan 1st and June 30th, right? 25 crore, and spent another.
And 25 crore rupees after obtaining the general borrowing, that is post-borrowing expenditure.
Remember, they spent 20 crore on 31st March, X2. Another 5 crore on June 30, X2, right? 25 crore after they took a loan. And what people might think is, they'll think we have to find interest only on the amount spent after the loan has been borrowed, right? But they are wrong. The reason is, you will apply, whenever it's a general borrowing, you will calculate something called the capitalization rate. In this case, there's only one general borrowing. And what is the rate of interest? 10%. You will apply that on the expenditure on the qualifying asset. Is that fine? The reason is very simple. Even the 25 crore what they spent before July 1st, right?
Yes.
So let us say, in case, they had enough money, they wouldn't have borrowed 50 crore on 1st July. They would have borrowed only what? 25 crore, right? Now, because they borrowed 50 crore and general borrowing, you had applied that rate even on the amount spent prior to 1st July. Is that fine? But one should refer to para 14 of the standard.
For each of the financial year ended 31st March 20X1, X2 and X3, calculate the borrowing cost that LT Limited is permitted to capitalize as part of the building cost.
There see the solution.
Yes.
So year ending 31st March X1. Remember you spent 5 crore on 1st Jan X1. On that 5 crore there will be no interest capitalized because there is no borrowing cost incurred, right?
Yes.
Next.
Applying para 17 of Ind AS 23 to the fact pattern, the entity would not begin capitalizing borrowing cost until it incurs borrowing cost, that is
Exactly.
1st July 20 X1.
So therefore you cannot. It's order para 17, para 14 for capitalization rate.
No, they discuss again. In
So
determining the expenditure on a qualifying asset, to
Asset.
which an entity applies the capitalization rate, para 14 of Ind AS 23, the entity does not disregard expenditure on the qualifying asset incurred before the entity obtains the general borrowing.
Exactly. Para 17 says that when do you start to capitalize borrowing cost, right? And then para 14 talks about what amount you should apply the 10%, right? Capitalization rate. Yes, ma'am.
Once the entity incurs borrowing cost and therefore satisfies all three conditions in para 17 of Ind AS 23, it then applies para 14 of Ind AS 23 to determine the expenditure on the qualifying asset to which it applies the capitalization rate.
Exactly.
So calculation of borrowing cost for financial year 20 X0 X1. So 1st January 20 X1, the amount is 5 crore and the capitalization period is 0/3. So the weighted average accumulated expenditure is nil.
That is for the first 3 months. Okay, next.
The next calculation of borrowing cost for the financial year X1 X2.
For the year, current year X1, X2.
So they've made it as 4 columns: date, amount, capitalization period, and weighted average. 1st January 20 X1, 5 crore rupees.
You know that brought forward amount. Amount spent on 1st Jan itself. That means that amount is outstanding even on 1st April. On 5 crore, what is the period?
9/12.
9/12. The reason is only from July onwards you can capitalize, right?
Yes.
So 5 crore into 9. Don't take for the first 3 months, April, May, June, because the company borrows the money only on 1st July X1.
So 3.75 crore. Then 30th June 20 X1, 20 crore.
Even on that for 9 months.
9 months of 15 crore. Then
And
31st
then
March 20 X2, 20
0
crore,
months.
0. So nil.
That's it.
18.75 crore. Then borrowing cost eligible for capitalization is 18.75 crore into 10%.
On that apply 10% rate of interest.
1.875
That is amount to be capitalized. Now tell me what is a total amount spent on the asset including borrowing cost. You spent 5 crore. You spent another 20 crore. And you spent another 20 crore. In all 45 crore. Plus 1.875 crore. And that will be the amount on which you have to apply the capitalization rate for the next 3 months. Is that fine?
Yes.
And no amount of interest will be on the amount spent on 30th June, right? Now, point to note over here, very important. This is a point given in para 18 of the standard, where the borrowing cost previously capitalized, even that will be taken for applying the capitalization rate. Is that clear? And that is para 18 of the standard. Yes, ma'am.
Yes, sir. Calculation of borrowing cost on X2, X3.
For the next year.
Again, the same columns. 1st January 20 X1, 5 crore, 3/12, 1.25
3/12
crore.
because 5 crores outstanding for April, May, June also, right? In the current year.
Then 20 crore on 30th June 20
Again
X1,
3/12.
again 3 months. 20 crore on 31st March 20 X2, again 3 months,
3
5 crore.
months.
Then 31st March 20 X2, 1.875 crore. On that 3/12, 0.47 crore.
You know, that including the borrowing cost.
Yeah. Then on the 5 crore on 30th June, 0/12.
Because that is spent on the last day on the completion date. Now, what is the total of the last column?
11.72 crore.
Okay, or
And
what
on
you
that
can do is,
10%.
or what you can do is take a calculator, guys. You can take the amount spent, the average carrying amount of the asset. Remember how much I spent so far? You would have spent 5 crore, 20 crore and 20 crore, 45 crore, right? Plus another 1.875 crore. Take a calculator. What is 46.875 crore into 3/12? And that will be some
11.72.
On that, you apply 10% interest to be capitalized. How much?
1.172 crore.
Then add that also to the cost of the asset.
That's it.
Understood?
Yes.
So guys, here the crux is the testing on 3 paras. One is para 17. Now when do you commence capitalization of borrowing cost? And also para 14, on what amount you apply the capitalization rate. And also you should understand para 18, even the borrowing cost previously capitalized will be considered in applying the capitalization rate. Is that fine?
Yes.
So guys, please go ahead and go through this example really well.